Welcome to weekly view on markets. Nifty closed with a gain of 0.96% for this week. Mid cap and small cap sectors consolidated with positive bias. Bank Nifty gained more than 1%, and private banks were leading the rally during this week. Continued FII selling is holding back the markets. DIIs are buying the dips and they are buying regularly and supporting the markets at lower levels. Charts indicate that markets may consolidate for a few more days at present level. Q3 results of the companies will start coming out in the second week of January. Also, companies' business updates will be coming out in the first week of January. They will guide the market. Next year, budget will be announced on 1st of February, and budget expectations also will be a trigger for the markets in the month of January. Now let us look at market levels during this week. Nifty closed at 23,813 with a gain of 226 points, that is 0.96%. Bank Nifty gained 1.09%, that is 552 points, and closed at 51,311. Midcap index closed with a gain of 73 points, that is 0.13% at 56,979. Small cap index gained 42 points, that is 0.22%. It closed at 18,755. India VIX is at 13.23. It has dropped by 12.21%. It shows that the fear in the market has reduced and informed investors are buying at lower levels. Now let us look at sectoral performances for the week. Most of the sectors have gained during this week, and more of a consolidation was there in other sectors. Auto sector gained the most at 2.30%. Pharma sector gained 2.25%. Healthcare sector gained 1.55%. FMCG, private banks, realty sector, NBFCs, oil and gas all gained around 1%. Manufacturing, consumer durables, infrastructure all were consolidating with around 0.5% gain. Media sector lost 1.81%. Metal sector lost around 1%. Commodities, public sector enterprises, that is public sector companies, information technology, PSU banks, all were consolidating with minor losses. There were more advancing stocks for the week than declining stocks. The overall market breadth was positive, but it was more of a consolidation. There was no major movement during this week. Now let us look at technical charts. This is the daily chart of Nifty. Nifty has given a breakout, or rather intermediate trend reversal after the fall. And after this trend reversal, Nifty went up to 24,700 and again has dropped from there. But if you look at the chart, this bottom that is formed is higher than the earlier bottom. So I still hold that the intermediate trend is up. There is nothing to worry, and from here, Nifty is likely to consolidate or go up from the present level. There is a good support at Nifty at 23,500 levels. This is the chart of Nifty Midcap Index. Midcap Index has good support at around present levels, that is around 56,500 levels. From here, the charts indicate that it is trying to form a higher bottom. This was the previous bottom at the end of intermediate correction, and from there it has gone up. Now it is trying to make another bottom which is higher than this. So the chart structure is positive and trend is up. So Nifty mid cap index is likely to take support at 56,500 levels. This is a chart of Nifty small cap index. Small cap index is also trying to make a higher bottom, and it has got good support at 18,500. By looking at the chart, I feel that Nifty small cap index should consolidate at present level, and trend is up. It has got good support at 18,500. This is the chart of Bank Nifty index showing good support at 51,000. Bank Nifty was leading during last week, so it is likely to continue the momentum further in the coming week. Now let us look at some of the fundamental factors of the market. This week the rupee has weakened further. It has closed at 85.51, and to stabilize the rupee, RBI must have sold dollars in the market, because of which RBI reserves have come down by 8.4 billion US dollars during this week. RBI forex reserves is at 644.3 billion US dollars. So weakening rupee is a concern for the markets. Brent crude price is at 73.44. The crude price is between 70 and 75, which is good for Indian economy and for the markets. Gold price is also steady at around 76,640 for 10 grams 24 carat. FIIs have sold 6,323 crore during this week. FII activity has come down. They used to sell around 10 to 12,000 crore per week. It has come down. Generally, during December, FII activity will be lower. And domestic institutional investors have bought 10,928 crore in equity during this week. They are buying a dip in the markets and supporting the markets at lower levels. Lot of data is expected to come out in the next week, that is the first week of January, which will guide the market movement. Data on GST collections, automobile sales, and business update of companies. All these things will start coming out in the first week of January. That will give a guidance to the market movement. Markets will look forward for Q3 earnings. Quarterly three earnings also will start coming by the second week of January. That is another trigger for the market. And also the upcoming budget. Budget will be announced by Finance Minister on 1st February. The expectations of the budget also will be a driver for the market in the month of February 25. Technical charts indicate consolidation with positive bias. We have looked at charts. Market will test the patience of the investors. Markets, after falling, will not go up all of a sudden. They will test the patience of the investors. Investors have to hold on to their investment. There is nothing to worry. Macroeconomic fundamentals are good, and charts also indicate kind of consolidation and with positive bias. So market may not see a sharp fall from here unless something happens globally. Otherwise, the charts look good and investors should hold on to their investment. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can ask your questions. We'll meet again next week. Thank you.